It's Monday, May 12th. Let's level up. Trade deal with China is looking better and better. 90-day suspension of the tariffs. Markets obviously like that. We did rally, but we are either into or very close to some next level resistance we'll discuss momentarily. As far as the VIX goes, very, very close to the channel low, which if it were to happen tomorrow would take us down to 1744, and 1702 is a key reference level. That is 100% retracement from the 325 low. If we get over the 200 MA at 1976 and then clear today's high of day at 2044, I would be very careful because I think we could pop back up to the 2376 to 2480. Then we'd see if that clears, then it's 2832 to 2957. I do think, though, there will be some support in the VIX in the 17, so if we do have another up open, probably a good opportunity to lock in some gains and raise some stops at the very least. As far as the ES and the NQ go, we got a little bit close to 5,900. Bulls here will need to hold 58.37 quarter and get back up over 58.5375, and then of course clear 58.6575. On the downside, if they can't hold 58.0575 to just, let's say, 5,800, I think we're coming down to 57.68.5, and then if that isn't able to hold wherever the 200 MA 30-minute is at the time, currently very close to the 57.20 to 57.2475, which is of course prior major resistance, which I do think now would be support if we do get a larger liquidation break, probably would be the next big target on the downside. We want to keep it super simple. If we can't clear 5,900, we go to 5,800. If we can't hold 5,800, we go to 5,700. And if we clear 5,900, we go to 6,000. As far as the Qs go, bulls here will need to hold 20,690, and on the upside, clear 20,930.75 to 20,991.5. If those can hold, we'll see a liquidation break likely to 20,474.75 to 20,536.75. As far as SPY goes, nice gap and go today. We're well over the 575.35 expected key resistance. We're very close to the 78.6 of the range, though, at 585.10. I think if bulls are going to keep in control, they need to hold at least the low of day now at 577.04. I think if that's lost, and let's just say we get back below the 200 MA at 573.48, we'll probably fill today's gap down to 564.34. And then we'd see. If we can hold out up here and stay above that 575.35 to 577.04, I think consolidation here would actually be healthy because it would be showing that the gap can be maintained, and we would continue on up and maybe even make a run at the all-time highs at 613.23. I do believe that 600-ish area will have some resistance. So if you're in some calls and you want to turn them into spreads, selling 600 plus as your upper strike makes a lot of sense to me. As far as the Qs go, also over some key levels here. 78.6 is at 511.19. I think low of day at 501.48 is key to hold, and if we weren't able to hold 499.70, we'll likely come back and retest the 487.93 to 493.62 level, roughly the 200 MA. What was resistance now, quote unquote, should be support. I mentioned that Apple and Google and Amazon, all these companies were likely to see upward moves because of buybacks and dividends, Amazon not being included in that, but Apple and Google. But generally, these big cap tech names were likely to see big bounces post-earnings. As far as Apple goes, it needs to hold over the 50 MA here at 210.42. If it does, the next resistance zone is 214.66 to 219.38. And then, of course, the gap fill from 4.2 all the way up to 223.89, which I do think is in the offing if the market stays bullish. On the downside, if we were to lose the 208.42 and low of day at 206.75, 20 MA is just below at 203.20, and then we'd see, of course, there's also the gap from today at 198.53. As far as Google goes, nice continued rebound. I think as long as we're over the 20 MA, it's okay at 157.24. Bulls there will need to also clear the 50 MA, which could be some resistance, at least short term, at 159.76. And then I do think if we were to get up to the high from the dump day on 5.7, we'll probably see some resistance at 165. But ultimately, I am thinking that this could get back up into the 173s to 180s, barring some bad news. It may take a little bit of time to do so, though. Amazon looking pretty good. I actually used today's move to trim some gains, though, because we got up to the 61.8 of the range at 211.52 and the 100 MA. We did close just around there at 208.38. So what now? I am still long calls. I did book my short put spread. Basically, I was short a put and long one below. I was short the 185s, long the 160s. I use that to basically break even with a slight gain, and now the call spread needs to come into focus. Again, there had been some roll downs on that and some profit taking on the put side. So this trade will likely wind up becoming profitable, but it got there a little bit of the long way. We got caught a little bit on some of the pullbacks. We did manage it. So the portion on now needs to become profitable, although the overall trade has been with all the rolling and adjustments. But generally, I think the bulls are okay as long as they can hold that 206-ish area. Tesla, nice rebound into some resistance at 319.03 to 325.10. Remember, I said all we needed was a gap and go above the downtrend. We got that on Friday. We actually closed over the 200 MA, so I do think what was resistance now becomes support at 293.58. If the bulls can hold here above the 219.03, the next big level is 351.39, which is the 50% fib of the entire range, spanning from the 1218 high down to the 47 low. Nvidia, nice gap and go above the downtrend and the 100 MA. Remember, if we trade above the 100 MA and back below it, it could be a right or right out short. Anything below 122.32, I think, is a short. If we lose 119.88, I think you press that for a gap fill, and maybe 116.65, and maybe even a press down to the 20 MA at 109.95. On the upside, the 200 MA is the next logical upside resistance at 125.02, and then the 61.8 of the range at 127.72. In the past, when we traded below the 100 MA and then back up above it, it was a long, and then lately now it's when we trade above it and then back below it, it becomes a short. Gold got hit again. I warned that the money flow was bleeding out of that and that rallies were to be sold into. We're coming back down again. I think bulls there will find resistance at the 20 MA at 305.39 and likely some support if we keep pulling back to the 50 MA at 289.15. I had told you if we can't get over 316.65, I think the risk is down to 281.68, basically from the 2.618 down to the 2 times range. If you want to do a 1/2 put ratio playing for the move down there, I like it. We had also talked about rolling money into Bitcoin. That did see a nasty little reversal today, potential secure high here if we lose 101,060, which was the high from the prior session. In the after hours, we are forming that right shoulder. Bulls here will need to negate the 101.820. If they can do that, then that secure high is negated. I still feel better over 102.554 for the move up to 106.945. On the downside, it's possible we stalled here at the 78.6. We could come down to the 61.8 at 96,591. Generally speaking, the market is up a lot here on the trade deal. I think a lot of the easy money has been made. I think that there could be some consolidation here. I would use up opens to lock in some gains, particularly with the VIX down into the 17s. Might even want to look to put on some protection to hedge some longs. If you have been short premium, like we've discussed, it's good to book some more here. We liked booking some in the 21s, and now if we stay in the 17s, I think that that's a good opportunity. Keep an eye on the 10-year yield. That has been the bit of the fly in the ointment lately, and we're actually seeing TLT plunging again. That could roil the markets and spoil the party. I think it could be a money demand issue, meaning if business is picking up, interest rates will go higher as there's more demand for money, and or the market not liking the budget deal. It seems like there's not going to be the cuts that are needed. I do think that ultimately higher rates lead to lower rates, but with the Fed being on hold and being pushed out, maybe those higher rates are coming sooner than not. Higher rates compress PE multiple premiums, and while we do have relief on the trade front, higher interest rates become problematic if they start becoming new highs. Like and follow for more.